Stocks trade weak with the mid-caps bearing the brunt but now have recovered from the lows of the day, reflecting in higher declines to advances. But PSU banks, healthcare and IT remain the big drags. Energy is a rare gainer.
Revenue Secretary Arvind Srivastava tells CNBC TV18 the hike in STT was motivated by an intent to curb excessive speculation in the F&O segment. Market players, however, wish the mop-up was used to offer tax relief to long-term investors.
DIPAM Secretary Arunesh Chawla is confident of meeting the government's disinvestment target via a mix of asset and PSU land monetization along with traditional divestment. He says that the government is also open to considering less than 51% stake in PSUs as suggested by the Eco Survey.
Automobile sales in January show sustained momentum following the GST rate cut, with most players reporting double-digit sales growth. From SUVs to tractors to CVs to two-wheelers, the pace is healthy all around.
Good afternoon, you're with us here on Business Lunch. We are coming to you from the CNBC TV18 budget headquarters. I am Hormuz Fatakia, with me Arundhati Ramanan as always. Arundhati, good afternoon.
Good afternoon, Hormaz. Hi guys, the markets, the Nifty and the Sensex showing some resilience. The Nifty near the high point of the day, 0.5% in the green, but the broader market feeling the heat.
Indeed, and it's been an extremely topsy-turvy session, right? At one point, we were down to almost 24,680 odd, which was the low point of the day. And from there on, we have seen a bit of a rebound of almost 200, 250 points from those levels. So it's been a smart recovery that you have seen on the index. And the recovery is more impressive, particularly so because yesterday, when the fall happened, we were bracing for the fact that the FIIs would be returning to the market, and that could potentially add more pressure to the indices. That has not been the case, at least as of now. We did see that dip, but that dip has been bought into. What has been extremely choppy, though, has been gold and silver. And you see the price action. Silver prices at the spot markets are still down 12%. Gold prices are still down 7% in the spot market. So extremely volatile on the commodities front. Brent is also down 4.5%, 5% as well. The Asian markets have sold off. The Dow futures are down almost 500. So the global markets are in a sea of red. But as of now, we are doing fairly okay for ourselves.
Fairly better than what the global markets are faring right now. But if we take a look at those sectors, right, Hormaz, we've got the oil and gas stocks, which are doing really well. HPCL, IOC, all of them gaining in trade, as you can see on your screens, between 1% and 3%. We've got those auto stocks also doing really well after those auto sales numbers that have been trickling in over the last 2 days. Tata Motors, M&M and Ashok Leyland gaining in trade on. But on the downside, we've got those, pharma names seeing deep cuts. We've got Glenmark Pharma, which is down about 3%. We've got Lupin, which is also down. We've got Cipla, all of them seeing cuts of over 2% in trade. The IT pack also in the red, feeling the heat. Infosys and LTIMindtree, all of them seeing cuts of over 2%. In fact, even the metal pack not doing very well in trade today.
And that has been the case all through the last couple of sessions, right, for the metal names. But the one stock that's holding on is Reliance. That's keeping the market afloat. The highest point of the day now, 2.5% higher, is Reliance Industries, and that is the one that is the top contributor to that recovery that you have seen on the index, and then the subsequent up move as well. But the highlight of the last 2 days has been Finance Minister Nirmala Sitharaman's 9th consecutive budget, which is aimed at providing a thrust to manufacturing and offset the impact of the 50% US tariffs. Let's quickly take you through the top highlights. Now, the FM has proposed hiking securities transaction tax, or STT, on equity futures and options contracts. The defense allocation has been hiked by 21% to 5.9 lakh crore. The budget for defense modernization is up 24%. Overall, capex also saw a modest growth of 9%. And that is the kind of announcements that were made in the budget yesterday.
Absolutely. And as you pointed out, the F&O tax hike stumped D Street. In fact, the Sensex and the Nifty posted its biggest budget day decline in 6 years. Let's hear out what the Revenue Secretary Arvind Srivastava explained the rationale and for the STT hike. Take a look.
If you look at the volume of the F&O, if you compare it to the underlying securities market volume itself, or the size of the GDP for that matter, it is too large for it to be considered desirable. It looks to be fairly speculative, which is not a good way to take it forward. So in some way, this increase is essentially meant to address that kind of, possible risks that may be involved in this highly speculative side of the market. With no impact in the volume, if the volume remains the same, put together, it may fetch us around 15,000 crores or so.
And earlier we spoke to a number of market veterans, Samir Arora, S. Naren, Neelkanth Mishra, for some perspective on the budget. Here's what they had to say.
On Twitter, hundreds of times I have said that STT should be increased on futures and options, but always accompanied by a corresponding lowering of either capital gains tax or lowering of STT for cash or doing something. So that's why this one is that we are not accepting the fact that if you get, say, $5 billion through some FDI with doing hundreds of things, you can get it in 1 hour with the FPI guy if you understand the power of the market. I would think that because they were selling in that context at that time, we should not be doing things which are negative, because this means they will not change currently. Now, after 5 days, 10 days, 20 days, if there is a US deal or something which changes the sentiment for India relative to other markets, then it'd be different. But right now, how will that momentum stop?
The way markets have reacted since yesterday is as though the retail investors have made a lot of money in the last 25 years in derivatives, which has never been the case. In fact, the regulator prepared a long document showing how much money was lost in derivative segment. But the market reaction since yesterday is only to do with STT, because everything else in the budget was fantastic. This data center tax concession to propel investments in data centers. We have always been supportive to any tech trend in IT services, in cloud services. Everywhere we've been a supporter. So I think in AI also we have to be a supporter and create an AI services boom. So I think that step was a step in the right direction. From a behavioral point of view, we are seeing euphoria in precious metals. Honestly, we don't know how to value precious metals, but we do know that it is the riskiest asset class at this point of time. So we tell people, if you want to put money in precious metals, do it only through the multi-asset route. Because whatever we have been seeing in the last few months is completely euphoric. The challenge is people want us to get the top exactly right. It is hard. It is impossible. I mean, it is impossible for us to get into a euphoric framework when that euphoric top will be exact price and then come. Our experience of 2007-8 was when something becomes euphoric, you decide to become cautious irrespective of how much more it will go. And that has been our framework.
I think having predictability allows businesses and investors to plan ahead. There are no shocks, there are no dramatic changes in tax rates. The spending quality continues to improve. There is no attempt at wasteful spending, and allowing more money to go into the hands of the private businesses and investors. The challenge that I see, I mean, I think the STT issue is more for controlling speculation, as the finance minister also mentioned in the press conference. But the challenge, I think, is on the financing side.
And the reactions keep coming in on the government's STT hike. Nitin Kamath, the founder and CEO at Zerodha, in a post on X said, and I quote, that if the government's goal was to reduce speculative F&O activity, he was not sure that the STT hike would do anything, as 95% of trading was already in more speculative options, and argued that the STT hike would only push that share higher. He also recommended that if the aim was to reduce speculation, establishing who can trade options was the right way to go. He also expects the uncertainty on STT hikes to have a material impact on volumes, as transaction costs will make trading unviable.
Coming back to the currency, which has also seen some strength in today's session, the external flows of the country are holding up better than the headline moves are suggesting, according to DEA Secretary Anuradha Thakur, who flagged strong FDI inflows, even as foreign portfolio investors continue to pull out in the near term. She also commented on the upsides of a weaker rupee. Listen in.
How much of intervention should be there to arrest the decline of any currency is a matter of great debate. as it has been in our country as well. And as we see the depreciation of the rupee, the capital flows which are behind this, the FDI has been behaving in a particular way and FPIs are behaving in a different way. The overall FDI flows are pretty strong and stable, I would say. If you see a netting off because of the ODIs, that's a different thing. The FPIs are pulling out for completely different reasons, including valuations, including interest rates, etc. So in the short term, we did not really think that the budget should be doing anything. So far, we've been watching it. And like it was explained 2 days earlier when the economic survey came out, it is in that zone, of course, right now. But so far, it's not
in the uncomfortable zone.
Yes, because the moment it crosses 90, everyone talks about it, we start watching out. But so far, we are just looking at it as something which also has some positives for the country. So closely watching it.
Which enhances the export competitiveness.
Yeah, absolutely.
And the strategic disinvestment of IDBI Bank has moved to an advanced stage with technical and financial bids now invited, says DPAM Secretary Arunish Chawla. On reports around bringing down the government stake in select PSEs to 26%, he said all possibilities were on the table.
The strategic disinvestment of IDBI Bank has reached stage 3, which essentially means that technical and financial bids have been invited. I will not be able to give transaction-specific details, but I would only say that be patient. Before the end of the current financial year, in March, you will hear more from us. The number is big, and this is a composite asset monetization target. This is miscellaneous capital receipts. It includes disinvestment receipts through various modes. It includes asset monetization of other types. It includes the new securitized innovative instruments.
Meanwhile, the government has set 80,000 crore rupees as its disinvestment target for FY27. The Economic Survey had made a recommendation with regards to the government bringing its stake below 51% in PSU stocks. DPAM Secretary told CNBC TV18 on Sunday that all possibilities were on the table. With a lowdown on the entire PSU basket and how much value can the government potentially unlock in case it does embark on such a drive, Hormaz is here with all of those details. Hormaz?
You know, you just heard the DPAM Secretary, right? He made a very interesting point, and this point was highlighted by us when we were at the Eco Survey as well, that it had mentioned that there's a possibility that the government should bring its stake below 51% in a lot of these PSU companies, because ultimately you need only 26% to have a control of the company. So, and all possibilities are on the table. Now, when a policymaker says all possibilities are on the table, you evaluate all the possibilities. So let's do that. And now, so we analyzed almost every listed PSU company in the country, which comes up to well over 80 companies. And in this analysis, we have also included companies where the government stake is less than 75% as well, and also companies where other PSUs are promoters of the company and not exactly the government. So it's the cross-promoting as well is part of this analysis. Now, if you take a look at the shareholding of the government in these PSU stocks, there are still 9 companies whose shareholding of the government is in excess of 90% as of the December quarter. There are 10 others whose shareholding is between 75 to 90, and the rest, the majority of them fall between that 26 to 75% mark. Now, when you take a look at that excess stake, since the DPAM Secretary mentioned 26%, you take a look at the excess in excess of 26%, that entire sum of these 80 plus PSU companies comes up to over 27.5 lakh crore rupees. That is a big number that comes out for a potential value unlocking that could happen in the future. Now, you break that 27.5 lakh crore rupees down, you'd see that there are 5 companies whose stake is in excess of 1 lakh crore. There are 12 companies between 50,000 to 1 lakh crore. And of course, there are 14 others between 25 to 50,000 crore rupees. Now, you go down to specific companies. The biggest in them all is LIC, of course, because the government still owns more than 96% stake in the company. And that excess 70% is still worth 3.5 lakh crore rupees, despite despite the correction that the stock has seen from its all-time high levels. Next is SBI, of course, India's largest lender, trading close to record high levels, and that stock is also valued at almost 3 lakh crore rupees, that excess 29.5% stake that the government has. Then HAL, Concor finds a mention in this list, ONGC finds a mention in this list as well. And a specific example that I wanted to highlight was IRFC. And that's because the government here, 4 years of listing for the company, and it is yet to comply with the minimum shareholding norms because the stake of the government is still at 86%. Now, that excess 60% that the government has is currently valued at close to 90,000 crore rupees. But there was a time when the stock was at its peak, almost 230 rupees. At that time, this excess stake was valued at close to 2 lakh crore rupees. Now, after that 55% correction that the stock has seen, the stake value has come down. That is one thing that you need to monitor, because most of these PSUs have already come down 30, 40, 50% from those record high levels. There are challenges as well. Of course, there are all possibilities on the table, but it's not easy, especially because there is a large equity base that needs to be divested, especially because in these 90% plus companies, with these small PSU banks that you're talking about, there could be consolidation as well of these PSU banks. So that remains a challenge. Now, there is a long gestation period for these disinvestments to take place. IDBI Bank is a case in point. It started off almost 4 or 5 odd years ago, still in process, might end before the end of the year. That is one thing that you need to keep an eye out on. And more importantly, the question being, do you expose sensitive sectors to foreign or, more importantly, non-government ownership, be it the defense or the railways sector? There are challenges aplenty. There is still an opportunity, but that opportunity right now is worth almost 27.5 lakh crore.
Absolutely, Harmaz. Thank you for taking us through those details. But on that note, it is time for us to slip into a short break. And coming up next, here's a quick sneak peek into the stocks that we will address on your stocks today. Don't forget to catch fundamentals and technical experts give their views on these at 2 p.m. today, only on CNBC TV 18. We're back with more news right after this. Welcome back. You're watching Business Lunch. Crude prices declined over 4%, heading for the steepest single session decline in more than 6 months, after US President Donald Trump said over the weekend that Iran was seriously talking with Washington. His comments eased concerns about a potential escalation with an OPEC member, following earlier fears of a possible military strike that had driven prices to multi-month highs.
And this comes after Iran's Supreme Leader Ayatollah Ali Khamenei warned that any attack on his country would spark a regional conflict as the US continues to build up its forces nearby. Khamenei said that the US wants to devour Iran and its vast oil and natural gas resources, adding that what happened during the recent anti-government protests was similar to a coup, since a large number of government offices, banks and mosques were stormed. However, President Trump said that Iran was in serious talks with the US and he hopes to make a deal in a couple of days. Listen in.
Why wouldn't he say that? Of course he would say that, but we have the biggest, most powerful ships in the world over there, very close, a couple of days, and hopefully we'll make a deal. If we don't make a deal, then we'll find out whether or not he was right.
On that note, it is time for us to head into a short break, but we will get you more news and updates on the other side. Stay tuned.
Welcome back. The big highlight of the day, though, other than the sell-off in gold and silver, has been the sell-off in the Asian markets, particularly in South Korea. The Kospi is down over 5.5% at the close of the trading session. And remember, Kospi was the biggest gainer among the Asian indices in 2025, gains of close to 70% last year. And today, it's witnessing this fall because of its two biggest index heavyweights, SK Hynix and Samsung, both of which had gained almost 180 to 200% last year. And now they are down over 6%. The Korean won also weakened against the dollar, adding to the risk-off tone. And it is this AI trade, questions over this AI trade beginning to unwind, remarks from Jensen Huang, all of them is having a bearing on the global markets today.
Absolutely, and the India market faring slightly better than those global markets. But on that note, it is time for us to wrap up this edition of Business Lunch. More news and updates coming up on the other side.